Hi there, my name's Siobhan Lancaster. I'm the CEO and Managing Director of 92 Energy. And today I'm here to tell you about 92 Energy, which is a uranium exploration in the Athabasca Basin, the highest grade uranium district in the world, and discuss our recent Gemini discovery and where that is today.
Siobhan.
Hi.
Hello.
How are you?
Here I am in Perth. I can't believe it. I've finally made it, right? Too long.
So nice to see you.
After a 26-hour journey to get here, but it's worth it, I'm sure. Hey, look, we're gonna talk uranium because it kind of seems like a pivotal year if the uranium sector gets it right and if experts are to be believed. We looked at 2022. We looked back in horror. It wasn't too happy for most people, yourselves included, quite frankly. Did you do anything right last year?
Well, I actually think we did everything right last year. So we had a great exploration program. We actually drilled the 7th best uranium intercept globally. So, you know, it was a fantastic drilling program expanding our Gemini project. I just think that the market was a bit sort of schizophrenic last year. And, you know, so I don't think we were given the credit for what we did last year, but I think we will be this year.
Well, okay, well, talk to me about that. So what did you do that you think you didn't get credit for that you will do this year?
Well, look, we did a lot of proving up of the Gemini mineralised
Meaning
zone.
what?
So, well, it was a brand new discovery. So we went in there and we did 2 drill programs, a winter drill program and a summer drill program, both of which continued to intercept uranium. So I think we had about a 91% strike rate of uranium intercepts at the Gemini zone. So it really proved that that zone is hanging together. It's a proper mineralised zone.
Right.
And that there's, you know, a really good base to build on. So that was the first thing. We obviously hit some nice high-grade intercepts. So 42 metres at 0.69%, which worldwide comparisons is a very, very good intercept of uranium. So we did that. And we also, of course, drilled our tower program, our inaugural program there, which is our program or project 10 kilometres from Cigar Lake, and that intercepted uranium. So lots on the cards and lots of good positive things from an operational point of view. So yeah, I think we've really set ourselves up for a great year this year. Okay,
well, tell me about some of that drilling, because your intercepts or the ability to hit mineralization improved as the more you drilled. And you talk about it's starting to hang together more. Were you brave or were you kind of cautious? You know, some companies go, well, we'll just do little small step outs.
Yeah.
We'll guarantee success. It'll be great for the headlines. But what were you trying to achieve?
Look, we were doing 20-metre step outs, which in Athabasca world is actually pretty standard. So the thing with Athabasca uranium is that it can be very high grade. And you don't want to step over that very high grade mineralizations by doing, you know, 80-metre step outs. So you want to make sure you can get those sweet spots because that really adds to the pounds. So we were doing a very traditional moving out 20 metres sort of step out at the zone just to prove that it works, it hangs together, it's a good zone. It's looking very similar to that initial Rabbit Lake deposit. So in terms of the depth, it's 90 metres from surface where it starts. So it's near surface. It's got some high grade in there. And it's got about the same footprint as that Rabbit Lake deposit.
So that, I mean, that's okay. That's you know, quite a comparison because obviously, you know, its reputation precedes it. With you guys, when you say it's hanging together, these kind of small steps, does that suggest that it's a small ore body? I mean, how many? We made one discovery, which is great. Yeah. Not many people make a discovery, so you know, good on that one. But what's the size of this opportunity in front of you?
Look, it's a continuous ore body at this point in time. So what we're doing with this program, which we've just started this week, is we're looking to expand that further. We'll probably do more aggressive step outs this time round from that zone. But we're also looking to explore along this 2.8 kilometre corridor that we've identified. And that corridor has some amazing geological similarities and geophysical similarities to the way the Rabbit Lake deposits work. So they've got several zones attached to them, and also the McLean deposits. So they have several zones attached. So our theory is based on the geophysics that if we drill along that zone and do some really aggressive step outs along that zone, that we should be able to identify additional zones along with that initial zone that we've got already. So not only is that initial zone open, but there's potential for more additional zones to the north.
So what I'm interested in is again, in difficult years, people sort of second guess themselves. They're saying, well, are we doing this the right way? But you seem to be focused on doing things right geologically.
Absolutely.
But in terms of messaging to the market, you're sort of signaling, look, we've done some excellent drilling, got some nice grades coming out of the ground here, but it didn't seem to register. It didn't seem to mean anything to anyone. So again, I'm asking the question is, why is the way that you're doing it right? What's it going to allow you to, achieve in 2023 in terms of people being able to value this thing properly?
Sure. Look, we're just taking a very systematic approach, right? And I know that we've joked about this in the past, but this is the way you do good geology, right? So we've taken a systematic approach. We've understood the geology and the way it works. Now we're using that model to apply it to hopefully find those additional zones along there. So, look, I think we've taken a very good approach. I wouldn't do anything differently in terms of how we've done the drilling to date.
Right.
I think it's the proper way to do it, and I think we'll find that there's potentially a lot of upside this year, particularly with that increasing uranium price, which hopefully we start to see playing into the hands of investors this year. And so not only I think we'll have that, but we're able to prove the scale up of this as a bona fide, mineralized area.
Do you think you, as an early stage explorer, because you've just started your spring program, obviously, and we'll talk about it a bit more in a second, but do you think you as an explorer are going to benefit from that moving spot price? People look at spot price. Right?
Yes,
I know it's all about term contracts, etc., but they look at the spot price as an indicator here. And to be able to, benefit from that, do you need to kind of change your messaging? Do you need to be talking about the scale of the potential, in which case you're going to need to prove that up? Or is this kind of systematic approach of yours the right thing to do? Because there's promoters out there, and then there's geologists out there. Where do you think you sit?
Well, I'm looking to extract the most value for our shareholders in the shortest period of time. So that's why I take this systematic approach. But I actually think we're just in this really good investor sweet spot. So we've only got a market cap of $40 million at the moment. But, if we have success in this program, which, I'm very hopeful that we will have that success that we think we're going to have, you should start to see a really substantial re-rate in the company as it really starts to unfold, particularly with an increasing uranium price.
But how much cash have you got?
We've got 7.2 in the bank.
So you're kind of okay for a while.
We're pretty good.
Yeah, you're not under any pressure there. So you can get this. Okay, let's get on to the spring drill program. So how many meters we're drilling? How much cash allocated to that?
So it's a winter drill program.
Oh, so winter you're calling it.
Yeah, so it's...
Sorry. Different part of the world. It's spring for me.
It's very cold. It's about minus 40 degrees there at the moment. So on site, we're using the winter roads to access it. We're not doing a helicopter assisted program this time around.
Cheaper, good.
So it's much cheaper. The cost will be down significantly on previous programs. And we're drilling 4,000 metres. So the bulk of that is going to go into that 2.8 kilometre.
So that's the wider step
corridor.
outs.
Yes.
Right, okay.
Correct. And the remainder of that is going to go into more aggressive step outs at the open mineralised zone that we already have there.
Okay.
So, we're proving scale in this program is really the aim.
And you're going to burn through how much cash for that?
Look, I think it'll be about a $2 million program.
So you still have a chunk of change left.
We still have a chunk of change. Exactly.
And so how does that work? You do the winter drill program. Obviously, assays come back and go, we've done a good job here. We kind of go back into the modelling and say, okay, we've got a better understanding now. And when's the next set of drilling happen?
So we would have to go away for April and May.
Yeah.
Or we'd come back in May, I would say.
Okay.
So, and then we'll come back again. And obviously, if we've identified additional zones, we'd start working on those new zones that we've identified.
And have you modified the way that you're approaching this given the economics crises we all went through last year? Do you know what I mean? Because you have to kind of stretch your cash out.
Yeah,
you have
absolutely.
to not blow it all at once. Or do you? Would you like to go say, right, we'll spend $6 million on the ground now and really show the market what we've got, and then we'll raise some hopefully cheaper capital?
Yeah, look, I mean, I think where we're at now is we've probably pulled back the program a little bit more than what we would have done if we thought the uranium market was, really raging
on a tear.
Yeah. So we've certainly done that just to ensure that we have the ability to do another follow-up program behind this. Mm-hmm. So we're being, sensible is how I would describe it, as you should be.
You'd be surprised, Siobhan. Some of the conversations I had in Cape Town. They're very confident about what's happening this year. So should we look? Okay, so you were cautious and sensible about the way you're going to move forward, just in case.
Yes.
So we better tip our hat towards the kind of macro at the moment.
Sure.
So lots of mobile inventory taken out of the market, all the sputs and the yellow cakes and the URA guys, they're buying this stuff up. We're starting to see a lot of contracts out for tender.
Yes,
which
absolutely.
is great news.
We're
sort of seeing $58 average at the end of last year.
Yep.
That could tighten up a little bit more. So that's kind of good news for the industry as a whole. How do you benefit from that? In terms of, you've just come back from 2 weeks in Sydney, right? You've been talking to investors and talking about your story, but what did you get from them? What are you hearing?
Look, I think everyone's very positive about the uranium market. I mean, I always come back to the fundamentals, and everyone perhaps gets a bit bored of me saying there's a massive gap in the market, and that gap is emerging, and eventually at some point you'll start to see that flow into that spot price. So obviously you've got the contracting which is occurring in the mid to long term market. Really the spot market is just being driven by financial players at the moment. So the mid to long term market is where it's all happening. You're seeing all those sort of cheaper contracts with Kazatomprom sort of flow through the market. They'll get capped out. It'll move on to the next tier and the next tier and so on. So we're now looking at and seeing, Paladin, for example, doing all these contracts. And you'll start to see that move up the cost curve, which will then, of course, move that into the spot price as well. So as those sort of mid to long-term contracts, the pricing comes up in them, you'll start to see the flow-through effect in the spot.
So here's my final question of the day, which is there's a lot of junior uranium explorer stories out there and a bunch in the Athabasca Basin, and there will be more of these. How do you stop yourself sounding like everyone else?
Well, look, we have money to actually continue drilling and proving this discovery up. We've obviously got the discovery. It's got grade attached to it, which was demonstrated by that 7th highest intercept in the world, grade-wise. And, of course, the grade could continue to grow. And, of course, we're going to be proving up scale. So that's really important. And we could look like a completely different company by the end of the year from the company that we are right now at the beginning of this year after we've done all this drilling.